Welcome to Sustainability Bridges, a Eurosif podcast that aims to build bridges between policymakers, investors, academics and civil society around the theme of sustainable investment. Eurosif, the European Sustainable Investment Forum, is the leading pan-European association promoting sustainable finance and investment at the European level. In these podcasts, Eurosif's Executive Director invites distinguished guests for a 30-minute conversation on current events shaping the sustainable investment community.
Hello everyone, my name is Aleksandra Palinska and I am the Executive Director of Eurosif, the European Sustainable Investment Forum. For this episode of Sustainability Bridges, I am honored to be joined by Ms. Rachel Owens, Director of Climate Finance at the European Climate Foundation. Rachel has over 15 years of experience working at the national, EU and international levels on sustainable finance, corporate accountability, human rights, labor rights and fighting corruption. In 2017, Rachel set up the first EU Office for Global Witness and before that was Chief of Staff to the Vice President of the European Parliament's Economic and Financial Services Committee. Together, we're going to discuss the importance of sustainability and sustainable finance for competitiveness and growth, the current European and geopolitical landscape, as well as key legislative developments we can expect in 2025 and beyond. Dear Rachel, thank you for joining us today.
No problem. Thanks so much for having me.
First of all, for our listeners who may be unfamiliar, could you briefly tell us about the European Climate Foundation and its mission and objectives?
Of course, thank you so much. So the European Climate Foundation is a kind of major philanthropic organisation that works both globally and across Europe. We support over 700 partner organisations, and really our main mission is about driving progress on achieving a net zero economy and particularly delivering the Paris Climate Agreement. We work on everything from kind of policy and regulation to politics, but also really focus a lot of work on people. So citizen engagement, for example. We have offices all across Europe and we work with partners both globally and across Europe. And I, as you said, lead our climate finance portfolio, which is all about how you kind of make sure that there is enough money to drive the necessary green transition, both in Europe and globally.
Amazing. Thank you so much. You've been involved in EU sustainable finance policy for some time now. What is your assessment of these last few years and also, the last few months in terms of climate action from the EU? Are there some key EU climate-related policy and regulatory developments that you would like to highlight? And do these initiatives also have an impact outside the EU?
Definitely. Well, I would say, it's clear to myself and many of us that work in this area that the EU is a global leader on sustainable finance, whether it's anything from corporate reporting to obviously the flagship Green Deal package of, numerous proposals all about how we align our economy in Europe with the transition to a green economy, which we know is so needed. The fires in Los Angeles are, just a daily reminder of the impact of climate that we're seeing on people and planet everywhere. So I would really say that Europe has really shown global leadership, much needed global leadership, particularly in an environment where we have, I guess, the politics going in a different direction and not necessarily supporting the kind of policies and regulation and hard decisions that we need to make to transition our economies and to protect our people and planet. So, 5 years ago, with the kind of new European mandate under Ursula von der Leyen's leadership, we really did see such a step forward in terms of, the necessary regulations and policies that we needed to ensure that the corporate sector, the financial sector, and many other sectors, the energy sector, for example, were aligned with net zero. So I think some of the things that really jump out to me are obviously the corporate reporting, which I know you've discussed at length on your podcast, but this is really key it's really about companies ensuring that their business plans and also that their impacts on people and planet are properly disclosed so that, it's clear which companies are moving in the right direction and which companies have more work to be done. Other really important regulations were obviously the taxonomy, which is all about how do you classify a green investment as opposed to a brown investment. I think that the EU could have gone further and could have actually classified what we don't want to invest in Europe. But as we know, that was extremely political. And then I'd say kind of a third piece of legislation that is, maybe two more that were super important is the Corporate Sustainability Due Diligence Directive, which I worked on previously at Global Witness and then have since in my role at ECF been funding and supporting partners in this space. This was really a hugely groundbreaking piece of legislation. It's all about, how you align the corporate sector with both in terms of kind of human rights, global human rights objectives, but also sustainability objectives. And it's the first piece of legislation which would require companies to conduct due diligence along their supply chains and their whole value chains, but also includes really importantly a requirement for companies to have climate transition plans, which we feel is incredible, and all of our partners feel is incredibly important about how it's basically like what is the business plan for companies to ensure that they're aligning with a 1.5 degree world, which as we know from the science is incredibly important. And then, of course, there's the famous SFDR, which is all about, how investors, what kind of information do investors need to put out into the market, and also what actions do investors need to make in order to align their investments with sustainability objectives. Then, of course, your kind of second part of your question is what's the latest state of play on that. I think we kind of ended last mandate in a good place. We passed many pieces of legislation, none of which were perfect because the EU is not a perfect entity, let's say. It's all about compromise. It's all about looking at different interests, different member states, etc. But I would say that since the elections that happened, as we know, mid last year, there has been a move to kind of politicize this agenda in a way which I don't think is particularly helpful. And obviously, we're hearing that there will be this omnibus regulation or this omnibus package that will come out on the 26th of February, which I think will, as we know, will look to revise potentially the taxonomy legislation, the corporate due diligence legislation, and the corporate reporting legislation. And I think my big fear with that is it doesn't seem to be hugely evidence-based or impact assessment-based, which is really important for EU policymaking. But and also it's not super clear how any of the kind of potential proposed changes will lead to more growth in the EU, which I know is, obviously is a huge political priority for this mandate. So, I think we're in a stage where we really need to make sure that it's about evidence-based policymaking rather than kind of politics kind of driving some of this agenda.
Yeah, great. Well, thank you so much. This is very helpful. Could we maybe just also take a step back and could you explain why we need to make Europe's economy more resilient and climate neutral? And what is the role of private investments for a just transition to a net zero economy?
So, great question. I think maybe it's always good to start with the science. As I said earlier, we're seeing climate impacts, across Europe, whether it's flooding, extreme heat, really impacting our daily lives in Europe and globally, but also really impacting business and companies, whether it's, seeing those direct climate impacts on their supply chains or in terms of long-term investments in fossil fuels. We know that will potentially, or they will be stranded assets. So, we could be losing huge amounts of money in terms of our pensions. So, I think the climate impacts from a scientific perspective are undeniable. And I think the big challenge, as we all know, is about how we shift our very complex global and European economy in that direction. At the same time, of course, we need to make sure that Europe is competitive internationally. And, particularly if you look at where a lot of the investment in, for example, renewables, that's mainly driven by China and more recently the US. So I think the EU needs to catch up there in terms of ensuring that we have access to very important renewable supply chains. But it's also about our economies being resilient, in terms of the figures that you see of the impacts of climate change. I mean, they're eye-watering figures and huge percentages of our GDP. So actually the cost of inaction, which I don't think gets enough discussion, is incredibly important. So that's what all this regulation and legislation was all about. It was all about trying to prevent some of the worst climate impacts on business and the economy, but also about how to make our economies more resilient. And maybe just to kind of, in terms of the figures, I foresee a kind of climate think tank did some analysis which showed that we need something between 400 and 600 billion per annum in Europe in terms of the investment in climate action, let's say, whether that's on the adaptation side, so adapting buildings or workplaces, or in terms of actually mitigation, so stopping climate emissions. And we know that roughly, depending on how the discussions around the EU budget goes, only 25% of that would be actually filled by public finances. And so, coming to your question about private finance, there's an incredibly important role and a huge opportunity, to be honest, for European investors to make money within this space. This is obviously the direction that the world is going to take. And there's a huge opportunity to invest in Europe, but also to invest globally in terms of sustainable investment, and also really looking at how you leverage public finance to leverage private finance. And I think that's really key, where the public sector or public finances can step in to do maybe some of that more riskier investment at the beginning, and then private, and really make kind of good marketplace for private investment to then come in and really provide that top-up funding, which we know is so kind of desperately needed. Yeah, I think this investment is obviously needed at a local level, regional level, national level, European level, and international level. And yeah, I think that all the things that we've been discussing really do make Europe more resilient. Maybe just the final thing to say, it was very, very clear with Russia's invasion of Ukraine that relying on dictatorships to provide us with our energy is not going to protect either our economy or our energy supply chains. And I think there has been some moves in Europe to kind of diversify and to reduce our dependence on fossil fuels, particularly from benign states such as Russia. I think there's more that can be done there. And again, that's a huge investment opportunity within Europe and for investors.
Yeah, no, amazing. I mean, I think you summarized it all very well, and this is very helpful. The political narrative at the EU level seems to be shifting, and we're seeing some efforts to frame EU sustainability reporting and due diligence rules as regulatory burden. You have also just spoken about the Omnibus initiative, aiming to simplify a set of EU rules on sustainability reporting and due diligence. What is your view on that? And also, how important and useful you would say sustainability reporting and all these different rules are, in what way they're supposed to actually help with the competitiveness and growth, and what about the cost of inaction?
Exactly. No, I think it's a really great question. And I think, I kind of alluded to that in one of my other answers. And that is definitely kind of my fear. And I think the fear of, the broader community in Brussels and beyond is that this is kind of politically driven, so not the evidence-based, as we talked about. Kind of where's the evidence that taking away all these, if you took away all of these rules, would the EU be competitive overnight? I highly doubt it. In fact, I think it'd be the opposite. But also, it seems that the conversation is solely focused on kind of the regulatory burden of quite a narrow range of reporting. Whereas, as we've talked about, Aleksandra, what about how much it costs companies to do general financial reporting, which is actually more expensive than sustainability reporting? So I think, if you're going to look at all the kind of burdens on business at the moment, then it needs to be looked at from a broader perspective. I think the other thing that's really important to kind of talk about is, as you said, the kind of price of inaction, which is very, very high. Some estimates have put kind of climate change has cost the EU alone 260 billion over the past decade. So that's huge amounts of money for the EU economy. And it's not very clear that kind of simplifying laws without robust safeguards wouldn't actually kind of worsen the environmental impacts that we're seeing, whether, as I mentioned earlier, floods, droughts, pollution, fires. So really looking at what are those like health and environmental costs that are primarily borne by national governments, but also companies. It's estimated again that implementing these laws could actually save the EU 55 billion annually in terms of the health and environmental costs. So that's one example. And then I think also it's really, if we look at the future, and actually this legislation is also about future-proofing companies and the financial sector and the European economy against sustainability risks. As I said, we're literally seeing right now in January the daily reminders of how much you can lose when the impacts of climate become so dangerous, and people in LA losing their homes and all of their possessions and all of their land. And is there any guarantee that they will get any money from any insurance companies? Because we know that California is very much an area which is uninsurable because the insurance sector deem it to have too much of a high climate risk. And so that's just a very market-based evidence of how high and how big these sustainability risks are. And I think there's a huge issue in the future of whole swathes of Europe not being insurable, and then who bears those costs when those climate impacts come? It is the public sector. And then, as we know, there are huge pressures at the moment on public finances, particularly because we have a war in Europe at the moment, that much of kind of our public resources are being redirected to kind of protect Ukraine, for example. And some of the kind of figures that have come out have looked at, a 2.4 trillion in losses in terms of the environmental impacts, which is actually the size of the GDP of Italy. So this is, it's huge implications. And I think the other thing to kind of say is that, again, because of the kind of shifting politics, we're now in this quite narrow conversation around regulatory burden. But the whole point of sustainability reporting was to put the right data out into the marketplace to ensure that both investors and companies really knew what was truly green, to prevent things like greenwashing, and to ensure that financial flows into projects which are going to protect our planet and people for the future. And I think that sometimes seems to be getting a little bit lost in some of the kind of big politics. And actually, I would very much argue that these kind of reporting and this kind of regulation really does protect the European economy against future shocks, such as, the energy shocks that came after Russia invaded Ukraine, for example.
Indeed, this is, I think, often forgotten in this debate. And I think connecting also to what you mentioned about the wildfires in California, I think this is, once again, a perfect example that basically we also need sustainability related disclosures to better understand the financial risks of, this kind of events, right? I mean, the probability, but what can be the impact. And I think it's also about actually companies and investors getting the data and information they need to better understand the risks, right? And therefore to better manage them. I mean, I think, you also gave a very good example of the war in Ukraine. And interestingly enough, actually, countries like Denmark, they already many, many years ago, because they invested in the renewable energy, they are actually much more independent from gas and oil, exactly, from the countries which are not necessarily democratic, and therefore much more resilient, also economically speaking. So I think indeed that is a very important point. And maybe on this occasion, I'd like to recall to Finance Watch report from some years ago that was actually already emphasizing that if actually sustainability risks are not better managed, we are actually risking a huge financial crisis in the mid to long term. So indeed, I think it's not really only about, doing good. It's not really about, in sustainability in a way that some people might understand it, but it's exactly about actually the economics, finance, and growth.
Exactly. No, I completely agree. And, many of us, like I was working in the European Parliament after the last financial crisis, which may show my age, but that was a very, very scary time for the global economy. And many, many people lost very, very severely, whether it was their pensions, whether it's investments, etc. And obviously many people lost jobs. And there were huge impacts to the kind of European economy. So we were in a very different political environment there in that time in 2008, where there was a genuine commitment to multilateralism, a genuine commitment to having global rules. And I think that is one big challenge, that if we did, and I completely think if we do not take the action that we know is needed, we will have a financial crisis. but in a very polarized world, which is extremely scary because in terms of the confidence that there could be a genuine global approach, of course, you could always find critiques in the approach that was taken at the time, but there was a global approach. And, to a large extent, the European and, for example, the US economies did survive those financial crises. So I completely agree with you. And I think that's what's really interesting about, for example, the European Central Bank is speaking out very, very clearly about the economic, financial risks of the climate crisis to the European economy and really, emphasizing on and actually holding different financial actors to account across the Eurozone in terms of their role as a supervisor.
Yeah, definitely. Now, going back to the EU Sustainable Finance Framework that has been rolled out since 2018, now looking back at everything that has been done in this space, to what extent do you think it has right now the capacity to respond to some of these challenges? And also maybe in terms of, further developing this framework, what do you think we need next?
Well, I think the way that I would have approached this mandate would be really about implementation. There was a lot of legislation which was passed last year, which really needs to be embedded. One example is as I mentioned, we're hearing that the omnibus package in February would reopen the Corporate Sustainability Due Diligence Directive, but it was only passed a couple of months ago. It hasn't even been transposed into national law yet. And that was obviously a very deep political compromise which allowed that legislation to be passed. So, one example would be don't create any more confusion in the European marketplace. Companies have already committed to implementing this legislation. We know that it will bring clear benefits. There's a very detailed impact assessment which was done before the proposal came out from the European Commission, for example. And this confusion, just all it means is that the benefits that we would see from this legislation will be delayed. There'll be more confusion in the marketplace, and more time is kind of wasted, and it will impact the ability of the European economy to be resilient to future shocks, which we're seeing more and more in a more volatile world. So I think that's one example. The Corporate Sustainability Reporting Directive is another example. It's only been implemented in the last couple of years. Companies have invested heavily in terms of implementing that. So I think really for me, it would be about really implementing this legislation. I think there are obviously kind of some small changes that are needed to make, for example, the SFDR legislation on investors, which definitely needs some kind of clarifying. We've been hearing directly from the market that investors need some clarity, particularly around kind of definitions of sustainable investments, etc. So I think all of those are kind of needed, but again, from an evidence-based perspective, not from a kind of purely political perspective, and really looking at how this legislation has been implemented both at national level and in the market. I think other things like benchmarks, we know, is something which we potentially will expect, but in some ways, given the kind of political reality that we are facing globally and in Europe, for me, it would be more about ensuring that legislation which was passed is properly implemented, and then also kind of really doing that kind of outreach with companies and investors to make sure that they understand this legislation, understand how to implement it, and to really kind of really embed it across the European economy, which I think would be the best kind of approach for the next, say, 5 years.
Now, maybe touching upon the Omnibus initiative that you have been referring to, given that we understand that the wheels are very much already in motion, right? So whether we want it or not, I think we can expect something to be published, as you mentioned, on 26th of February. What would be your advice here to EU policymakers? If some changes need to happen, also maybe to better align these rules, what would you advise?
That's a great question. I really think that, as I said, I think opening up the Corporate Sustainability Due Diligence Directive is just really not advisable. So much, energy and work was put into passing that at the highest political level. It was passed by all member states. It was passed by all EU institutions, and we really need to embed that now and to see how that will play out, and then do an evidence-based impact assessment, after a couple of years to see, for example, the financial sector was not in scope, and certainly we believe that it should be in scope of that legislation. But, I think reopening that piece of legislation is just It doesn't make any sense. It's not rational. I think the other piece of legislation in terms of the corporate reporting and the taxonomy, I mean, obviously, we have, of course, heard from market participants that and from companies that there is some elements to that are challenging. But I think, again, it's like trying to really listen to, for example, the investor perspective, which is incredibly important about what data they need. Because, remember, as you very well know, Aleksandra, the investors were actually regulated first, and then they've been waiting for this legislation in terms of corporate reporting, but also corporate due diligence, in order to be able to align their financial flows, which many investors really want to do. So I think it's also ensuring that some of that investor voice, but also the companies that were really at the forefront of kind of pushing for a level playing field around corporate reporting and corporate due diligence are really kind of listened to. Obviously, on the taxonomy, again, there's actually been quite a lot of data put out by elements of the European Commission to really show how the taxonomy is leading to greater investment in green investments. Obviously, some work still needs to be done there around closing some loopholes around particularly kind of some classifications of gas investments, for example, which we certainly believe will become stranded assets sooner rather than later. And again, as we saw with gas, it became very geopolitically sensitive and became a source of weakness for the EU because we were reliant on other countries, as you said, whereas Denmark was able to create much of its own power through its own investments at that kind of national, regional and local level, which obviously makes it a lot more resilient economy and country. So yeah, I think that would be my general advice. And I think also just recognizing that the EU really does play a very important role globally on this agenda, and really not wanting to erode any of that leadership, which is, so much needed right now. I think the other thing I would also say is that for EU policymakers, I think there is some more work that could be done to bring other jurisdictions along on this journey. I think that kind of Europe is one of, as I said, a global leader, but also has done the most kind of thinking from a kind of policy regulatory perspective, but also really built a great evidential basis for why this legislation is needed. And many other jurisdictions have followed suit, whether it's on the taxonomy. We've got global reporting rules, obviously, through the ISSB. But I think there's something more that the EU can invest on engaging, whether it's with Brazil and with COP30 coming up this year, whether it's partners across the G20, particularly on the Corporate Sustainability Due Diligence Directive, because it will require data to be gathered along supply chains, which will obviously be outside of the EU, and because it has a extraterritorial impact, much of this legislation, I think there is more that the EU could be doing to convene different countries to discuss this, to really explain why this legislation is needed, and to help countries to really understand and to implement the legislation in many ways. Well, they won't obviously have to implement it, but to be compliant with the legislation, let's say.
Excellent. Thank you. And finally, what do you think could be done to raise awareness and build capacity on the positive impact of sustainable finance for companies and financial market participants? Do these private actors also have a role to play?
Definitely. I mean, I think what I would love to see more, and obviously we've spoken about this, Aleksandra, is that kind of demand side, so the investor side being as vocal as possible to really make this very positive case for how they see it as an opportunity for investment to flow within the EU, which, as mentioned, with threats to the European economy that we've been seeing, is incredibly important, but also just really making the case for why, as we talked about earlier, the cost of inaction is really important. I also think there is like a really great story to tell in terms of, kind of European businesses kind of, leading the way in terms of, whether it's on building clean tech or renewable technologies, or kind of really positioning European companies as leaders in this area, which, as I said, we've seen what China has done over the last 10 to 20 years, and it's been incredible the impact that they have and will have on the supply chains of the necessary minerals and renewable materials that we will need for the kind of future economy. So, I think there's a real role for Europe to do that as well. And, particularly in an environment where the US may retreat in various ways under a President Trump administration, I think there's a real role for Europe to be a leader there. And I think you did see with, for example, in the US with the Inflation Reduction Act, which was all about kind of pumping subsidies into the renewable sector, that was it really has paid off. And also that legislation really thought about the impact on communities and how you retrain people and thinking about things from a just transition perspective as well, which I think is incredibly important. So I think also new partnerships potentially between investors and trade unions or people working in kind of the kind of workplace. I think that's also really exciting and kind of create new environments and new prospects and opportunities.
Excellent. Thank you, Rachel, for joining us today and for this very insightful discussion.
Thanks. Thanks for having me.